Welcome traders, freetradingvideos.com. You're with Breakout. Looking at the S&P here, we can see we're back down to the line in the sand, 850 mark in the S&P. I'm looking for a bounce here. I'm looking for a short-term bounce back up into this 1100 region, probably around the 1125 and maybe 1150 region. Very sharp, straight up, and then another drop right back down to test these lows again. Expect to be in this range for a period of time yet, at least another probably 4 to 6 months. We need to establish where the high of that range will be first. Now, if we break that 850 mark and drop, well, different story. Okay, and that's a very, very possible thing. We are in a bear market. We do have downside potential. At this point, we can see the momentum is decreasing. Big leg down, much smaller leg down. Same sort of thing here, much smaller leg down than the previous leg down. Now, if we break this 850 region, well, we are going down. Now, where to? If we break that 850 region, I'm looking at the down here. Coming right down to these lows right down here. And that, my friends, is around 770. Coming into that 770, 780 region, and we should see a lot of buyers come to the market based on that all-time support there. So, we get down here, my longer-term holds will be increasing dramatically at that point. We break that 850 region on the daily chart, and my longer-term holds that I've just been buying into very, very small positions, slightly coming to the market here. Now, every time I break below here, I go along the SDS, the QID, and the DXD, the bear ETF funds, to hedge that position to the downside. So there's a quick look at the S&P. If we can break above this upper trend line, that upper trend line is just joining the prior swing highs coming down through here. Break above that, we can really get that move on. Looking for a potential double bottom right here. Down, back up here. See if we can't do this one. And from there, what could happen? Well, if we get that there, well, we could then do this pattern. Double bottom, test of the high, pull back to break through. Now that's being very bullish and being very optimistic in a bearish market with all this bad news coming out. Just remember, Wednesday we've got the GM hearing where they're going to come through and decide what's going to happen with GM. It's going to be very, very interesting stuff. It's going to create turmoil in the market until that point. Be very, very light on your feet in these markets up until then. So one little quick trade here that I have my eye on at this point is Research in Motion. I'm really liking this formation here. Real nice double bottom. Not only that, let's take a look at the volume here real quick. On this candle here, we've got huge volume coming through to support this stock at that price point. We can see right here, nice volume coming in there. And again today, nice volume coming in. Even with the downward market today, we had the Dow down 2.6%, S&P down nearly 2.6. Research in Motion is still holding up in the day, phenomenal. So interesting today, the Russell's are only down 1.14%, whereas you can see the Russell's here down 1.14%, and the Nasdaq down on 2.29%. So these were the leaders, or the strength in the market, not the leaders, but the strength in the market. They weren't down as much as the Dow and S&P. So interesting. Could that be a bottoming signal? Could be, but we can't put too much weight on that. Till next time, this is Breakout. Stay safe in the markets. Please use stop losses. Number one rule when trading is preservation of capital. Breakout out.